much. So if you've been reading our writing this year, going back into the end of last year, if you've been reading our writing, listening to our podcast, you know that we've been talking about these particular topics a lot: strategy consulting, generative AI, and of course, ecosystems. And we wanted to cover it today in a slightly different way, and that's with more of a Q&A session with two of the analysts that are the most important analysts and writers that we have on these topics. And I'm going to be the one asking the questions, but I would encourage everyone as we're going along to put your questions into the chat, into the Q&A box. So what are we going to cover? So we're going to talk about a rebound in strategy consulting in 2025. We're going to talk about GenAI, and what's really important there is the change that we're going to see, that we were anticipating, in the way that not necessarily how GenAI is deployed internally to a lot of the companies we cover, nor the use cases for enterprises, but really the change in the business model that we anticipate coming because of GenAI-enabled solutions. And then lastly, we'll talk about ecosystems, because we talk about that a lot, and how much the ecosystem changed over the last couple of years. I'm hesitating here because we're having a little bit of feedback in the room. I guess that's a downside to back in the office. The plus side to working from home is we never ran into that. Anyway, with that, so I'm Patrick Heffernan, the guy on the far right on the screen. If you know TBR, if you've been to our webinars before, you read our research, you know that our research is based on covering specific companies, their business models, their strategies, and then their financial performance. And once we understand what's driving all of those three things and how a company is doing, then we compare them with like peers. Then we look at them, and as we'll talk about in great detail, within the ecosystem. So the two people that are with me today, Kelly Lashiska and Boz Christoph, both have a set of companies that they cover. So you can hear a lot about the companies that they cover, but again, feel free to ask about other companies that are within our coverage space within the ecosystem. So Boz is our lead analyst on Deloitte, KPMG, Infosys, and and Accenture. Of all companies to blank on, I blanked on Accenture, and Accenture, of course. And he's also our lead on global delivery. He's our lead on digital transformation, and he's one of our two leads on the ecosystem reports. Kelly Lashiska is our lead analyst for Fujitsu, HCL Tech, McKinsey, BCG, PwC, EY, and T Systems, and Fujitsu as well, if I didn't say them at the beginning. So she's got a very wide variety of companies that she covers, and of course she's got four of those right in that management consulting space with EY, PwC, McKinsey, and BCG. So with that, let's chat about what strategy consulting and what we think we're going to see in the coming year. It was a bad couple of years for strategy consulting. A lot of the management consulting opportunities we saw and where we saw growth was in and around operations. How do I make more money with fewer resources? How do I contain costs in a very uncertain market? And what we started to see towards the end of the year was that things are starting to look up for strategy consulting. We were hearing those kind of rumbles and rumors from people within the strategy consulting space. We were starting to hear it more from clients. But what I want to ask Kelly and Boz to talk about are sort of what are the conditions that the market could create, or what are the conditions that we're starting to see among the different players in the space that will show us that there's been an increase in the demand that is a better market for strategy consulting. So Boz, I'll start with you. What do you think you're seeing out there to make this case?
Yeah, I think there's a few factors that are a continuation of what we started seeing in the second half of 2024 and trickling into 2025 that will have some positive impact, while the overall growth may still appear a little choppy and not as consistent as maybe what we saw in 2022, 2023. So one is definitely the discussions around GenAI. I mean, the whole idea around road mapping and how GenAI fits into buyers' existing IT systems and architecture that's still in play. But the conversation has changed from just a pure proof of concept to more like the ROI discussion and trying to be a little bit more focused on tangible outcomes. So the change management that comes along the way with GenAI certainly a front and center. We are hearing increasingly that that's is providing opportunities for some of the big four and the other IT services vendors, some of them investing even in learning services as a way to think about the bigger, broader implications on the workforce, especially GenAI has created so much questions and uncertainty, for many in the space. The other one is data, and obviously GenAI without data is nothing, it's as good as it gets. So the idea of becoming and developing the right data architecture, the data foundation, that's certainly an opportunity for the vendors to build that momentum as they think about the implications for GenAI I just mentioned a moment ago. But also we see a lot of discussions around ERP consolidation and understanding of the advent of a new wave of, let's call them laggards in the industry, in terms of like enterprises in industries like public sector maybe, and as well as insurance and others that are being a little bit slower to move into and adopt and start thinking about the digital transformation roadmaps and programs. So those types of enterprises are creating the conversation, and they're still fueling some growth in strategy consulting and overall operations consulting for the services vendors, as they try to think about in two ways. One is obviously cloud first, and moving to cloud, which workloads and how they can position themselves to, but also now that AI and GenAI is in play, how that's all going to map together. So, ERP consolidation, which obviously creates a lot of opportunities around workflow automation, data modernization, data architecture, and change management is as a result of moving into GenAI at scale. So that's kind of three major themes that we are capturing.
Yeah, and it's kind of fascinating because you're talking about markets at the opposite ends of the sort of enterprise IT spectrum. On the one hand, you have the enterprises that are trying to make the most out of this new technology that they've invested in. And on the other end of the spectrum, you have the laggards that are slow to make that ERP change. And I guess when you think about that, the bell curve or whatever it is of companies, there's a lot of opportunity there. Kelly, what are your thoughts on conditions that will create a better market for strategy consulting?
Sure. Thank you, Patrick, and thank you all for joining. I think something that we hear time and time again from our the consultancies and a lot of the other IT services vendors is how a lot of their clients are thinking that their business models won't be viable over the next few years, the next 5 to 10 years. And so I think just that kind of mindset coming from the client side, knowing that there has to be a change somewhere and that they have to rethink their business model, how they're approaching things. So not even just the consulting side, on the client side, how much change is needed coming out of this technology, how they can use it, where to apply it, what types of technology to use. And even as Boz was saying, a lot of the different layers within the organization, looking at the cloud side, the orchestration, the data side, how our workflows managed. I think we'll see a lot of opportunity coming out of that, which will be more beneficial for strategy consulting. As we've seen over the past year or so, a lot of it has just been bringing in some of those basic tools into place to assist with efficiency and kind of testing the waters a little bit on what the best application of some of these tools are. But now it's shifting more into how can we change the entire business and better work to make sure that we're viable, we're able to continue and actually compete in the space. So I think that's definitely one of the bigger areas that we'll see looking for strategy consulting. I also think kind of coming out of a little bit of what Boz was discussing, a lot of the overlap in a lot of the technologies and how it all works together. So how you can really make the most of your cloud structure, your cloud environment, but also looking at the data side to make sure that the data is structured, it's usable data, it's quality data that you can actually take and use to make valuable assessments, really just make sure that you're getting the most out of it. Because if the age-old saying these days for data, if the data's bad, the output's bad. So you have to make sure that they're really looking at each layer of their business to ensure that they're able to better make the most of these technologies and just ensure that they can remain competitive. I would say those are the two points that kind of stick out to me.
Yeah, and just to jump on the data point for a second before we move to some specifics, I think the the idea that data orchestration is just a kind of an operational decision, like how do we wrangle the data and how do we process it and how do we store it and how do we use it and all that. That's the outcome of having a data strategy. And so I think there is an opportunity here as data becomes more, as the problems with data become more of a boardroom issue, that we'll see a data strategy as a boardroom issue as well. And then I'll lead off in terms of what companies are going to benefit from the uptick in demand. That's because, Kelly, you mentioned it, the business model reinvention. We were hearing about that about a year ago, a little more than that, a little more than a year ago from PwC, a firm that has had, what was BTX, Business Technology and Experience, and now we've got BXT, Business Experience Technology. Now we have business model reinvention, and I think that's, Kelly, what you were describing sort of says that enterprises are really in a position now to be ready for that kind of strategic advice from PwC. But Balls, I'll let you've got all your companies on here, and then we'll go to Kelly next. But why don't you tell us what you think is, who's going to benefit from this resurgence?
Yeah, the other three companies that are listed here on the slide are companies that I cover closely and publish reports on a quarterly and semi-annual basis. So starting with the KPMG, I think obviously KPMG is a company in transition, as many are in current environment. And the pivot that the firm is making obviously is focused a lot on AI and GenAI and being more organized as a global organization rather than just a collection of member firms. The investments the firm has been doing in terms of portfolio adjustments, partnerships, people are certainly helping its position to, when demand comes back, to be better positioned and kind of make that a jump as they understand that maybe the opportunity for them for cloud may be a little bit behind, but there's certainly a great opportunity for them in the long term with AI and GenAI. But so one particular area that we've seen and is their focus on deal advisory. And so obviously we know that the M&A markets have been cooled off in the last couple of years. But there's an expectation, anticipation with the current administration, especially here in the U.S. The deregulation will free up some of those activities and warm back up the M&A markets, which is one of the core markets for KPMG. Obviously, they will still rely on their people expertise, but the next wave will be augmented with some AI-enabled tools and platforms that will help them to drive not just a growth, but profitable growth, essentially, in a market that has been really slowed down. So that's a good kind of a market segment for them, and again, mainly boiling down to the anticipation of the new administration enabling more deregulations. Deloitte. It's also, they're not in a transition, but they're in expansion mode, I would say, in terms of their portfolio. The transition from a capability perspective is mostly oriented in expanding their managed services capabilities. They call Deloitte Operate, really a strategic initiative for the firm. And I think it's something that we have seen and heard on a one-off basis, other firms trying, where they will try to use their managed services stickiness and presence at the client side to use as a backdoor to drive some consulting work. We believe that Deloitte will try to do that at scale as they are trying to, as the amount of investments that they put behind Operate, backed by also their industry specialization, the industry advantage framework that they have, as a way to think a little bit differently, because increasing that stickiness with the client, understanding and gaining knowledge of the business processes and the workflows of the enterprise can also help them think a little bit more about where maybe the next opportunity for consulting workshops will be. So there's those consulting discussions may be a little bit more tied to a specific business process reinvention and workflow automation and whatnot, but it's kind of a back to front consultant, versus the traditional way of like lead with consulting. So this way, maybe a little bit more of a lead with managed services or Operate to drive consulting. And last but not least, here on my company list, Accenture, certainly a firm, a company that has really been investing heavily and leaning heavily on its partners. SAP being one of the largest partners for Accenture. We started hearing from Accenture and SAP a couple of years ago, actually, about the idea behind establishing the clean core. And thinking about what does that mean in terms of like how do they position their work, how their opportunities with the client, and then discussions with the clients, standardizing a lot of the processes in the north of like 60 to 70% enterprise processes being standardized, and then drive fewer customization, essentially to try to drive consulting at scale that way. A lot of the consultants that they have with Accenture Strategy Consulting, especially in Accenture Consulting, have been going through a massive retraining and reskilling along the way to be a little bit more tech savvy. So understanding, and I brought up ERP consolidation is one of the big initiatives that we see as a growth driver for strategy consulting. I think Accenture's relationship with SAP presents that kind of a channel as they look into what's next, as we understand how SAP is adjusting its support deadlines and trying to be a little bit more proactive. There will be opportunity for Accenture to be a little bit more strategic. We've seen them making some big announcements around forming joint ventures with clients, or being a little bit more proactive about investing on client sides and trying to increase their stickiness, but around particular partner technologies.
Yeah, excellent. And Kelly, what about you? Who are you looking at in this space?
Yeah, thanks. I think, as you had talked about, I think PwC is definitely one to keep an eye on, building off of that heritage around BXT, but also moving into the newer business model revolution framework. But I think also a lot of their products kind of align with some of these areas too. Thinking about a lot of the deep database history they have. I believe it's called Saratoga. They have a lot of data pulled from that. And I think just all the data and repositories that they have, they're able to really reach into a lot of those more sub-segments or smaller business units that do require some of those shifts too, following a lot of these market changes. So I think pulling on a lot of that definitely fits well here. Another company too, I just wanted to call out was BCG. A lot of their recent internal kind of investments around reskilling, around a lot of the portfolio changes to better integrate their technology portfolio. So a lot of those subsidiaries that brought their data capabilities, the digital strategy, bringing that all together and embedding it a little bit better with the consulting capabilities that they have. I do think there'll be one that's better positioned to kind of navigate a lot of these strategy consulting changes. Even looking at the past few years, I think they've had decent performance too, just thinking about how they've approached engagements, how they've been evolving themselves alongside that technology landscape has definitely equipped them, thinking about some of the talent compositions that they have. So instead of just focusing on one side of consulting, they're also looking into bringing in those the scientists, the technology experts, a lot of the engineering. So bringing all of those pieces together, I think really does equip them in a good space to continue with the strategy and moving into the tech side of strategy and how to effectively use that.
Yeah, I think when we look at our one thing that always jumps out at me when we do our management consulting benchmark is you look at BCG and we think of them as a one of the strategy houses, and yet their largest service line by far is operations consulting. And while I don't think a rebound or a resurgence in strategy consulting is necessarily going to change that overall weighting within BCG, I think it will help the firm continue to grow above faster than peers because they have that strong legacy capability built on the backs of the operations consulting they've been doing for forever, and which has been really successful for them lately. All right, let's move on to generative AI. I want to just call out this quote on the side here and just put it in the context, not of who said it or what it actually says, but that we're 2.5, 3 years into the Gen AI era. And what are we looking at? We're still looking at not adopted enough to be measurable as desired. And I think what this person was trying to say is that, yeah, there is ROI. There are cases out there, but it's not enough of them at scale to be able to say this is how, well, not measurable as desired, not enough to be measurable as desired. I get that, and it's kind of surprising that we're still here. I guess if you took the great big step back and looked at technologies overall, the adoption of technologies and how they change the business model, we'll get to that in a minute, but how they change enterprises and the adoption, the measurement of ROI has always been tricky. But here we are at a few years into Gen AI, and this is what we're still looking at. So let's turn what we're going to talk about today, though. So setting all that aside, there are so many use cases. We know Gen AI adoption is accelerating. Everyone talks about agentic AI, but the big question for us, the two big questions for us today, How are these IT services companies and consultancies, the companies that we cover in this particular practice in TBR, which is from McKinsey on one end to Wipro on the other end, although the firm as a whole covers the entire space, how are they actually measuring ROI of their own investments and those at their clients? Boz, I'll turn to you again first on this one.
Yeah, I think it's a ongoing battle. I would say that ROI is a discussion, not a battle. But some of those vendors that had a little better experience with RPA 5-7 years ago have some lessons learned to think about applying, the metrics that are coming as a result of automation and AI to the employee efficiency metrics. Because as we're talking here, we're talking about people's business, right? IT services, consultancies, they're heavy on the human capital. So they're trying to better understand how will their operating models change, and measuring, AI. Certainly, you can look at either the top line expansion or bottom line, efficiency. And one of the key metrics that we're starting to hear from the vendors is around the employees. Obviously, revenue per employee change, and the idea behind decoupling, revenue growth from headcount growth, is a way to be a little bit more efficient and effective at scale, which obviously impacts how those companies think about monetizing the technology and how they're actually thinking about driving those business model changes at scale as they pitch those solutions to clients. Because obviously they come from a, hey, we're going to save you X amount of dollars or percentage productivity benefits. So it's kind of a double-edged sword, because clients are also now starting to expect vendors to adjust their pricing schemes, right? And instead of charging them for times and materials, the conversation changes towards more of an outcome-based pricing. So there are many ways to measure ROI. I don't think there's one single metric that vendors have stopped and said. But like I said, because given that we're in those companies in the people's business and people's driven delivery, revenue per employee and operating income per employee, those efficiency metrics and utilizations are the key ones to monitor.
Excellent. And Kelly, any thoughts on this particular question?
Yeah, it's a difficult question, but I'm thinking it's hard to measure ROI for something that, like the quote that you pointed out. It also spans so many areas. I think it's hard to actually measure the value of how much you're getting out, especially depending on what type of data source you're using, where the data is actually coming from, whether it's your own data or if it's other people's data, more public data. I currently, from what I've seen from some of the vendors, I think they're really looking not so much at use cases anymore. I think they've kind of shifted more into actual application. And we've seen more of the vendors actually coming out to say, oh, we have X amount of GenAI projects. For example, HCL calls out a handful of GenAI projects every single quarter. There's a whole section in their presentations, their earnings presentations. And then Cognizant also, this past quarter, for 4Q24, they reported they had over 1,200 early GenAI engagements. That's in 2024 as a whole, so 1,200 for the year of 2024. So I think that's maybe how the vendors are kind of measuring their kind of progression around it, not so much what they're achieving with the GenAI, but more how they're doing internally, because it's such an open question how you're valuing your own usage, whether it be like Boz was talking about the talent or a different piece of the organization.
And then Kelly, that brings you back to when a couple summers ago, where we were seeing companies saying $1 billion, $2 billion, $3 billion investing in Gen AI. And really, what did that even mean? And I guess it's on us to go back now and look and see how much of those billions were actually invested in Gen AI and how much it was in another part of the business and what's been the return. So the second question here, the answer is yes. I'm not even sure why I put it in here like this. The answer is yes. And the question really is how and with whom. And so with that, we'll jump to a couple of specific companies to talk about. And Boz, again, I'll let you go first here since you got Infosys and Accenture on the screen.
Yeah, absolutely. So I think I started alluding to that, in a moment ago. So Infosys is a good example of a company that have started to experiment with what their business model of the future is going to look like, right? We're talking about starting with, again, the people's component and developing career paths for their workforce that is dedicated either to a traditional IT outsourcing kind of a work, and also career paths for more of a higher value, specialized skills, people that are really behind the development of the perimeters of the large language models, or the small language models that they start launching in the last quarter, essentially. And those people, the latter part, are the one that actually they are testing and trying in the discussions with the clients. What I mean by that is when Infosys comes to clients, they talk about the outcomes. They talk about those productivity benefits that a client could gain if they use a particular model that they have developed either themselves or it's on top of a partner model, right? So this requires trust in the algorithm, trust in the perimeters in the model. This model will perform to the expectation that it will deliver whatever 15, 20, 25% benefits, which puts pressure, right, on those people. So you cannot just have an army of people. You have to have very dedicated people that are focused on that model. Obviously, there's some industry specialization that's required as well as they build the models, either for financial services or IT operations, whatever the case might be, because essentially Infosys is on the hook. That's the true outcome-based model. So this is being tested with some clients. Obviously, it's not at scale, but this is where we see others moving in that direction, and we see Infosys being a little bit more aggressive as they are trying to capture those early benefits. Obviously, there's a risk associated with testing those outcome-based contracts, but they still have enough of large and mega deals in the traditional IT outsourcing that helps them to make the pivot while continue to run the business as successful as they have been in the last 5-6 years. The other one is Accenture. So Accenture, a little bit, in Accenture way, so to speak. It's for us, it's about thinking what Accenture has done in the past with Accenture Cloud or Accenture Interactive or Accenture Strategy and Consulting. So we see Accenture developing kind of like their own Accenture AI business, essentially, as a way to think about what does that mean and how it permeates the rest of the organization. We don't expect Accenture to move into and start selling software per se, because we know some of their peers are testing that model as well, even though others have failed in the past. There's maybe timing was wrong, and now the other, the vendors are actually thinking about being a little bit more aggressive and it's to push it forward. But Accenture will continue to be a little bit more on the services side, but having that brand behind Accenture AI business, so just like Accenture Strategy business, will carry a certain weight, and will carry a certain weight in discussions around strategy consulting. We talked a moment ago in the IT implementation will be the connecting link, similar way the way Accenture Technology, Accenture Cloud, I would say specifically, has been kind of almost like a horizontal across all the other businesses, and it has impacted their performance in a positive way. We see Accenture AI business being playing in that role. They are kind of the opposite of what Infosys is doing and developing the tracks. This seems like to be marching towards the 1 million people organization. Every quarter they continue to add people, even though they were a little slowed down 18 months ago. So we do believe that's going to remain their quote-unquote differentiation, be the largest of all, and just do maybe take the work for that's still out there for human-based delivery.
Scale is almost always a competitive advantage. Yeah. Almost always.
Almost always. Yeah.
Kelly, thoughts on this?
Yeah, just a quick thought here. As I had mentioned a little bit before, I think the progression from just use cases onto more tangible areas where vendors are able to use the Gen AI is definitely where we're seeing things going. I think Cognizant is actually a good example here. Over the 2024 year, they identified 3 main focus areas within AI. So basically, they're picking 3 stronger use cases for them, and that's how they're going to develop their Gen AI. And I think it fits, and we'll see more of that kind of narrowing in on more of the key uses of Gen AI. So for software development, for example, definitely reducing that manual labor, data modernization and orchestration, to see how to support the AI usage and enterprise framework. And then also we've heard a lot of it more recently, and Boz and Patrick, I'm sure, can expand on it too, but we heard a lot about agentification last week with KPMG. So I think a lot of a lot of these key areas and how they're using it is where we'll see a lot of the vendors kind of shifting and structuring their portfolio as we move through 2025. And I think even further than that, it'll kind of narrow in a little bit further than just the broad use of one particular area. But I think we'll see it more narrowed in for sure.
Ellie, I'm glad you brought up the cognizant and sort of focusing on key use cases. I think that's one significant change we've seen from a couple years ago, where we were getting questions nonstop about what are the use cases that are resonating with clients, what are the use cases that are the fastest growing. And by use cases, I mean early adoption of generative AI. And for us, it was frustrating because the answer was, well, what's resonating is what you're selling well and what's making sense for your clients. There's no one single size fits all. And I think a lot of companies tried to do everything for everyone with respect to generative AI. And we're seeing the smarter companies, to be honest, figuring out that they can be very, very good at specific use cases in specific industries. And they're focusing on those and they're bringing those to the market and focusing their go-to-market dollars and their investment and their people and their training on those specific cases rather than trying to be everything to everyone. So a quick chime check for everybody. We've got one more section to cover, and that's ecosystems. And then we'll go to Q&A at the end. We usually try to wrap these up within around 45 minutes past the hour, so about another 13 minutes or so to go. If you have questions, please drop them into the Q&A box. So now we're going to talk about ecosystems. And I love this particular quote from an SAP executive that we heard just recently, because it's about as direct and simple, but you can unpack so much of it about the way that software and cloud and OEMs and hyperscalers and everybody, infrastructure providers, look at the IT services companies and the consultancies, and these are the things they basically want. To understand the portfolio, which I can unpack that for a while, what that really means. Innovation with us implies a lot of things, including investment, and it also includes innovating alongside clients. And then industry expertise, which everybody says they have, but what does that actually mean, and how do you tell the difference between industry expertise that's meaningful for a particular technology solution and industry expertise that is just sort of out there. So a lot we can turn to here. I do want to highlight what's something that's really important. We've done a lot of research on the ecosystem, with some of which sort of culminated in our Voice of the Partner ecosystem report last summer, looking at the relationships between IT services companies and consultancies and cloud and software players, and then OEMs. And so we captured all sort of sentiment from all kinds of different players in the ecosystem. And so a lot of our research since we published that has been taking those findings and testing them with the companies we talk to, again, across the entire spectrum. And despite the fact that we cover the consultancies and the IT services vendors, we spend a lot of our time speaking with the Lenovos, the Dells, the AWSs, everybody in the broader ecosystem. So let's turn to these questions. Boz, I'll get to you first again with this first one. What have been the best strategies? The ones that when you looked at that Voice of the Partner research and then you thought, okay, who's doing this well? We'll get to the who later, but first let's start with the what.
Yeah, I think if I can boil it down, I guess, across a common theme across all vendors, regardless of which category they may be part of. So number one is executive alignment, like top-down executive alignment, trying to ensure that there's a vision alignment between the two organizations, and in some cases, actually 3 organizations or more, because that's another model that is becoming more of the norm these days, multi-party alliances. The second one is the joint investments. Joint investments at the people level, joint investments at the portfolio level, the co-innovation, trying to be a little bit more proactive around, you mentioned industry specialization, aligning around what industry's partners see each other strong, not what the partner itself sees themselves strong, but what their partners think they're strong and what they can help them best with. Because partners can say we can operate in 19 or 32 industries, you name it, right? But a vendor can say that, but if a partner don't see you as strong equally, and often they don't, then what good does it do for you? So you have to make sure you align your strengths by industry with a partner that you may be strong in a particular area. And the last but not least, which I think is the hardest, has been the factor on knowledge management and how those companies think about themselves and how they ensure that the use cases that they develop, the use cases that they experience are understood and preached by their partners, meaning that how well can SAP tell the Accenture story and vice versa, how well SAP can tell the PwC story and vice versa. And at that third dimension, third partner or fourth partner in the mix, that knowledge management becomes even more complex, right? So this is where we believe not a single vendor has cracked the code. There's some pockets of growth and opportunities and success for some vendors. We'll talk about those in a moment. But in general, this is the knowledge management is very hard because it's something that requires again vision alignment and joint investments that and really caring, and which translates into like incentive models, pricing models, and so on and so forth. Yeah.
Well, while you're talking about, let's jump onto that next question too, and then Kelly, I'll come back for you to answer the first two bullets here. But do you see AI as a separate revenue stream, as because we're talking about that AI? There's no services vendor or consultancy that has an AI solution that's sort of standalone, so it's with their partners. But does that mean that AI needs to be its own separate revenue stream?
I think the companies that will try to sell it as a software, they probably try to identify it and itemize it that way. I think for the most part, most services companies will continue to be blended. We may see some outlines now. I think the numbers we're hearing right now a little bit more of a PR play than actual, something that they will start to measure. Now, saying that, a moment ago I said how maybe Accenture will have Accenture AI business, which could be translated into a separate revenue, but that revenue is often overlapped.
Right.
Just like Accenture Cloud is overlapped, just like other parts of the organizations overlap. So, is there a need for an AI revenue? It's a good outbound messaging for companies, especially when they're successful. But then it's also can raise some additional questions about how exactly you're monetizing it, and is it like tied to your pyramid? Is your pyramid changing because your AI revenue grows?
Right.
And so on and so forth. Yeah.
Right. And so there are implications for the ecosystem by how you structure your AI practice. So Kelly, your thoughts on these first two questions?
Yeah, sure. I think something big in terms of thinking about the strategy to approaching an ecosystem and how it shifts. As we've seen, differentiation is very difficult when it comes to alliance partners. A lot of the partnerships you see across the vendors with some of these bigger partners, they're very similar, and so it's harder for them to create how to show your clients or other clients that you're doing something different, you're doing something better than another vendor. I think kind of staying close to home, or I know as Boz likes to staying in your swim lane. I think keeping close to those core strengths of building out and partnering with vendors around some of those core strengths to show how you are doing things different or how your approach is different, so things that are more close to what you do best. Like I think HCL is a good example here. I know you said not who, but thinking about them from an engineering perspective, how they approach a lot of their partnerships and a lot of their acquisitions, how they use them to kind of strengthen the capabilities, but also of the engineering, but also adding other pieces too. So it's not just, you're not just looking at the engineering side, but you're using other pieces to kind of enhance that while also moving into new areas.
And I think that's one of the questions we've heard about HCL Tech so consistently over the years is around what advantages they get from having that heavy engineering sort of legacy mindset culture. It all just sort of feeds in, and at the moment they're in a good spot for that. So then let's actually pivot now, and when we talk about this last thing that buyers are expecting from their partners, we can maybe talk about a couple of specific groups or specific companies. So Boz, I'll let you lead off again.
Yeah, I mean, I think I mentioned a moment ago, I think Accenture's like we cover like XXS means like put a partner's name here, right? Business group, yeah, Accenture SAP Business Group, Accenture AWS Business Group, and so forth. So they started a decade ago now, probably with some of those key technology partners. And why we say is will remain the most emulated way to demonstrate depth and trust is because since then we've seen many of its essential peers really going into, they may not call them business group, but they call them business units, COEs, ways to demonstrate tightness and closeness and really understanding with their partners. And I think that's going to become more important because the days of being vendor agnostics are gone, right? And it's something that it's a good option. Obviously, you can argue that buyers don't want to get the lock-in, yada yada, but actually buyers have been educated and bought enough technology over the last decade plus or 2 decades that they know which technology works. They know which vendors work better. So it has risen to a time where vendors need to come forward and to be bold with their recommendations. And we heard a couple of weeks ago with KPMG, use cases where they moved forward with a very strong technology recommendation. In some cases, they did win the work because the buyer actually saw them as the experts in a particular technology area, and they were able to maintain that consistent messaging. In other areas, kind of like disservice them for the time being, but later on to come back and give them more work because essentially the buyer actually gained the respect of the client and because of the transparency. So it's in a way of saying, okay, we know what we're doing with this partner, and that partner actually tell that we are the right services partner as well, which is very important, and that resonates with clients. So those business groups are a good framework. Again, other vendors do it in their way, shape, or form, but it's about choosing your select top 5, top 7, top 10 partners. They're really strategic, and you want to pursue those 3 initiatives that I mentioned: alignment, investment, knowledge management at scale that actually is helping to demonstrate that value, and that's how the ecosystem is evolving moving forward.
Excellent. And Kelly, some thoughts on specific players in the ecosystem, and honestly, Kelly, whether it's the companies that we cover or anybody that they're partnering with that you think are sort of doing things right these days. Put it that way.
Yeah, I think EY is actually a good example here. Their approach when they had a big change, I want to say like 4 or 5 years ago, when they really emphasized developing that partner ecosystem and working more closely with partners. And since then, constantly they're looking to put towards financial investments into developing these partnerships, not just for the partners, obviously, but also across the organization. But the alliances are a good piece of it, I think, to call out here, and how they're really quite dedicated to developing that both internally as well as developing talent internally to be skilled on these, so using the EY badges and certifying their employees on a lot of these partners and their products. But then also actually what they're doing with the partners and or alliance partners, and how they're moving forward either through technology or even just leaning into their consulting side, not just partnering for tech's sake, but also using their own consulting with a more technology focused client or technology focused partner. Working from that perspective as well to really make the most of what their own skills are. So going back to the last question, kind of in a sense, is what are your true strengths, and using that. I think that's definitely a key part. I think we've seen a lot more partners vendors looking to partner more deeply with some of the hyperscalers, and how best to do it. If it's looking at HCL, they created all of their they created business units for each of those partners. So for Microsoft, and AWS and Google Cloud. So creating those business units specifically to work closely with those partners and ensure that they have enough staff, enough resources to really become more elevated partners for those vendors. But then you also have ones that are just trying to kind of spread across as well, and just make sure that they're able to work with any partner and ensure that whatever technology their client is coming to them with, they can respond to and make sure that they can work with. So I think it's kind of a balance, I think, to how you're developing and how deep you really want to go with one partner, looking at the business units, if it's something you're really dedicated to and investing all those resources, or if you just want to be able to to just address any and all, pretty much.
And I think, Kelly, you've highlighted exactly what a lot of our ecosystem research is about now, and that's what is the size of my competitors' practice with my partners. So how many people does Deloitte have dedicated to Microsoft or to AWS or to Google? How many people, and the reverse is also true, like how much revenue are they generating in their partnership with each other? And we go very deep into Salesforce and Adobe and Oracle and Workday and SAP and Google Cloud Platform and Azure and AWS and their relationships with the largest of the IT services vendors and consultancies. So I think what you just said there, Kelly, was really important to sort of frame out exactly that. So we have a bunch of questions in the queue. We will handle those via email or phone call, depending on how people want to get the answers from us on that. We're a little bit past the time. I do want to ask one quick question because it's in the queue and I like it a lot. And it's to Boz. You mentioned the lessons learned from RPA. So what were those lessons? I think it's a great question.
Yeah. Well, I think one of the key lessons that most vendors that try to go in RPA, the effort on RPA was about selling RPA as RPA, right? And I think the lesson there was that, being a services company, it takes a different sales organization, different portfolio development and maintenance support, different partnerships to sell software. So that was, understanding that tools are tools in the consultant's toolbox. Don't try to position them as a software platforms that, can actually change your business model, right? I mean, there might be some pockets of opportunities, certain lines of business, or certain functions that may be applicable, and clients could procure, as a service from some assets from the vendors. But I think that was the biggest lesson, because the impact on the P&L of and pivoting from a services P&L to a software-enabled company P&L, it's a much harder than it looks like on paper.
Yeah,
I would say.
Yeah, that's a great way to think about it too. And I mean, we hear repeatedly that from people that have been doing AI for a long time and people that have been sort of quicker to understand the implications of generative AI for a consultancy and for an IT services vendor, that it's a tool. It is not an end in and of itself. Yeah. And sometimes I think that lesson hasn't been learned quite yet in enterprises as well. So We'll see how it goes. Excellent. Haley, I'll turn back to you to wrap us up.